Welcome to Smart Stock Watch. It is March 2nd, 2026, and today we are diving into a pivotal report from AST SpaceMobile. The company has just released its fourth quarter and full year 2025 results, marking a historic milestone as they transition from R&D to a revenue-generating entity. Joining us to break down the numbers is John, senior analyst from Smart Stock Watch. John, this seems like a coming-of-age moment for ASTS, doesn't it?
It absolutely is. For years, investors have been waiting for this space-based cellular broadband vision to turn into a tangible business. Reporting $70.9 million in revenue for the full year 2025 is the proof of concept the market needed. This wasn't just theoretical. It was driven by actual gateway deliveries across 5 continents and significant milestones met with the U.S. government. They are no longer just a pre-revenue science project. They are an operating satellite service provider.
Q4 earnings and EPS analysis. Let's look at the bottom line for the fourth quarter. Analysts were forecasting an EPS of -18 cents, but the actual figure came in at a loss of 26 cents per share. John, how should investors interpret this miss, especially given the strong revenue performance?
The EPS miss of 8 cents relative to the consensus of 6 analysts is primarily a reflection of the company's aggressive scaling phase. While they beat on the top line with $54.3 million in Q4 revenue, their operating expenses also climbed to $126.6 million. We saw a $23.9 million increase in cost of revenues, specifically tied to the volume of gateway deliveries. Essentially, they are spending more because they are doing more. For a growth company in this sector, the market often prioritizes revenue traction and liquidity over a narrow EPS miss, provided the capital is being deployed effectively into the satellite constellations.
Operational milestones and launch cadence. The technology side of the report is equally busy. They've successfully unfolded Bluebird 6, which they claim is the largest commercial communications array ever in low Earth orbit. What does the roadmap look like for the rest of 2026?
The roadmap is incredibly ambitious. Bluebird 6 is expected to exceed 120 megabits per second peak data speeds, which is a game changer for direct-to-smartphone connectivity. But the real story is the launch campaign. Bluebird 7 is already encapsulated at Cape Canaveral for a March launch. From there, they expect to launch new satellites every 1 to 2 months. The goal is to have 45 to 60 satellites in orbit by the end of 2026. This cadence is necessary to move from initial activation to a broader, continuous commercial service.
Commercial backlog and government contracts. Beyond the launches, the commercial momentum seems to be accelerating. They mentioned over $1.2 billion in aggregate contracted revenue commitments. How significant is that backlog?
It's massive for a company at this stage. A standout figure is the $175 million commercial prepayment from STC Group as part of a 10-year agreement. That's non-dilutive capital that validates their tech. They've also expanded partnerships with global giants like Orange and Telefonica. On the government side, the $30 million award from the Space Development Agency for the HALO program shows that the U.S. military sees tactical value in this high-bandwidth, low-latency space network. They are successfully diversifying their income streams between commercial MNOs and government defense applications.
Balance sheet strength and manufacturing expansion. Capital intensity is always the big question with satellite companies. AST SpaceMobile is reporting a very robust balance sheet. John, walk us through their liquidity position.
They are in a very strong position. Pro forma for the recent convertible notes offering, they have over $3.9 billion in total liquidity. In February 2026 alone, they raised over $1 billion through 10-year senior notes with a very favorable 2.25% coupon. This gives them the runway to complete the 2026 launch goal without constantly looking over their shoulder for more cash. Furthermore, they've acquired a 4th manufacturing site in Midland, Texas, bringing their global footprint to over 500,000 square feet.
They are building the infrastructure to mass-produce these microns at scale.
Key takeaways. John, to wrap things up, what is the final verdict on AST SpaceMobile's 2025 performance and the outlook for investors in 2026?
Thank you, John, and thank you all for watching Smart Stock Watch. AST SpaceMobile is clearly entering a high-velocity phase. What do you think about their 2026 launch goals? Is the $3.9 billion war chest enough to win the space race? Let us know in the comments below. Don't forget to like, share, and subscribe for more deep dives into the latest earnings reports. We'll see you in the next video.